So as long as it's fair, as long as it's voluntary, inequality is fine. Inequality is great. We want those who succeed to be more rewarded than those who destroy value. But in the sense of our current environment, we have really sinister inequality.
If everybody, if the water's flowing and everyone is benefiting, right, everyone's cup is filled, people are happy, right? They have better things to do than to line up outside of someone's house and threaten to chop their head off.
I don't think we should be setting up guillotines anywhere, and that's why I love Bitcoin. It's the peaceful revolution, right? But why do people want to set up these guillotines? Because they know the system isn't working. It's not working for them, and despite working very hard at many jobs and climbing the ladders, it's still the prospects for retirement, even the ability to afford a home today is just it's outside of the reach of so many very hardworking Americans. The system is not serving them. The system stratifies wealth through asset inflation and in disproportionate access to assets.
Hello and welcome to the Tucson Blockchain Podcast. Today I have on Sheila Weinberg from Truth in Accounting. She's the founder and CEO and feels that it's really important for average individuals to understand the government numbers. Our governments are broke, and that's what I really learned from this conversation. And we talk about the implications that this has on normal people and the future ahead. I hope you enjoy. And we're recording. Welcome, Sheila.
Thanks for having me.
I did a bit of research on you. So you are the founder and CEO of Truth in Accounting, which is a nonpartisan American think tank. And it sounds like you do a lot of auditing the government when it comes to their numbers.
Well, we look at the government's audited financial statements and try to find the more truthful numbers, because some of the numbers that they're reporting isn't quite as truthful as they could be or upfront. So we restate the numbers. For example, years ago, they used to not put their pension and retiree healthcare liabilities on their balance sheets. So we went ahead and we'd go ahead and track those down and do a simple 2-page document that people can read about their governments.
Yeah. And once you go to the website, which just has an infinite amount of good information, it can be pretty depressing when you look at the discrepancies.
Yes, yeah, we actually have 2 websites. We have truthinaccounting.org, which has the depressing federal debt clock. And then we also have another website called data-z.org. And there you can find the federal financial state of the union, the financial state of the states. You can click on the map there and go into each individual state and get their financial state of Arizona, financial state of Illinois. Then you can click on cities and get the 75 most populated cities financial state of the states. And then the most fun part you can do is go to create your own chart, and you can compare states to each other we have more than 700 data points in there, and you can also do that for the 75 most populated cities.
That's awesome. Yeah, that's a really fun, cool tool to use. And I'll definitely be using that in the future on my journey. So in going and recording and kind of challenging the official narrative around government financial statements, what is the goal of doing that?
Well, taking it away from the numbers, we go back to an informed electorate. So, in order to decide who to vote, spending and policy decisions, spending and tax decisions, you really need to know the true numbers. And we really believe that our representatives' forms of governments are being diminished because citizens have not been told the truth. So for example, in state and local governments, they'll say, hey, we balance the budgets. And they've been telling the citizens that for decades. Everybody thought everything was going along fine. They voted for people assuming they, were telling the truth that their budgets were balanced, but the governments were going into debt at the same time that they theoretically were balancing their budgets. So when people went to the voting booths and decided who to vote for, they might have voted for somebody saying, oh, well, they're living within our means. We'll continue to reelect those people. Or they might have, what if they had to truly balance their budget and report these hidden costs? Then they would have had to raise taxes, i.e. they would have lost votes, or they would have had to cut spending, i.e. they would have lost votes. So citizens going into those voting booths, think tanks trying to get their policy through, just really don't have the information they need to be knowledgeable participants in their governments.
Yeah, that's pretty apparent. One of the things that I've found to be really clear on my journey in podcasting and just learning about what money is that CPI is one of the most inaccurate ways to measure inflation, and yet it is the official metric. So there is a very obvious discrepancy between what's actually happening and what's being reported. It doesn't take a whole lot to kind of debunk CPI. You can just ask a normal person, how much more expensive have things gotten for you over the past 10 years? And then you look at the CPI number and it's pretty obvious that it's not accurate. Why do you think that governments are so prone to fudging the numbers?
Well, if you think of an elected official, they want to get reelected usually, and so if you have to go to the taxpayers and say, well, in order to fund the government that you're getting, we're going to have to raise your taxes, then they're not popular. Or if they have to, they can't offer expensive programs and benefits like pensions and retiree healthcare benefits, or just generally healthcare benefits. If they had to report those numbers truthfully, then they might not get reelected. So it's easier just to hide the true cost of government. Don't include all your expenses, all your debt when you're calculating your budgets, and then you have a greater chance to get reelected.
Yeah, government spending seems to be a growing, a much more popular way to get elected and get attention nowadays.
Yeah, and that's why the states do have balanced budget requirements. 49 of the states, everybody but Vermont, have a balanced budget requirement. The 75 cities, most populated studies, cities that we studied have a balanced budget requirement. But in order to meet those requirements, they've been hiding debt. But the reason they have those requirements is so that the governments don't go into debt. And also for accountability. There's a great quote by a former Treasury official called Frank Kavanaugh, and he said that the politicians shouldn't have the ability to spend, i.e. they're going to get a vote, without the pain of taxing, i.e. they're going to lose a vote. And that's why you have those balanced budget requirements. So as you're always going to have people who want more government, more spending, more, people like things for free, but the offset is the taxes. And if the governments would have had to raise taxes to cover these expanding governments, then people, again, might not have voted for them. But as long as it didn't affect the people's pocketbooks, the governments were allowed to expand, hide the costs of government, and expand beyond what the citizens are willing to pay for.
Yeah. One of the hidden taxes that I think isn't talked about, there's a lot of hidden taxes, but one of the hidden ones that people aren't as aware of is inflation, because that's, what inevitably happens is when you don't raise taxes and you just print money and increase the deficit, increase government borrowing, it devalues the purchasing power of the money in people's hands. So regardless, it seems like more spending creates taxes in a way.
And inflation is a politically easy thing. They don't have to vote on it. It just happens. The Federal Reserve prints extra money, and people. It happens in slow increments, so people don't notice it. But but things get more and more expensive.
Yeah. So there's kind of a growing sentiment around modern monetary theory, which is essentially, the idea that we can print infinite amounts of money and not experience inflation. Why do deficits matter to the normal person?
Deficits matter because, going back to that accountability, the very most important thing. And if you talk to people, they're just like, yeah, governments are out of control, spending is out of control. But that's because there's no offset. There's no, we're not paying the taxes to cover it, so people don't notice it. If people were paying the taxes to cover these deficits, then they would go, hold it. Well, do we really want government that costs that much? But by being able to, but these deficits just allow governments to expand beyond what people are willing to pay for. And you lose control out of the government.
Yeah. On your debt clock, it says that each taxpayer's share is coming up near $1 million. It's $878,000. So if we were to attain a balanced budget, would that mean that we would each individually be responsible for that sum?
A balance, you have to look at budgets and you have to look at debt. A balanced budget is just what happens during 1 year. So your what you make is your revenue equals your expenses, and that theoretically is a balanced budget. The debt is because they haven't balanced the budgets for years and years and years, they've made promises for years and years and years, and not funded those. Those all have accumulated into the national debt. And we calculate that accumulation is $137 trillion. And as you say, it's more than $800,000 per taxpayer in the United States. And and each taxpayer to get rid of that debt they would have to write a check to Treasury, for $800,000 in order to clear the debt that we've accumulated, plus to have enough money set aside to fund all of the promises that have been made to date, including Social Security and Medicare, unfunded Social Security and Medicare promises.
Kind of sounds like a big Ponzi scheme to me.
Yeah, when Enron happened and the senators and representatives were kind of drilling Kenneth Lay, and they were saying, that this sounds, what you did was a Ponzi scheme, and you had these off-balance sheet liabilities, and honestly, a lot of things that they were saying that Ken Lay did, they are doing themselves.
Yeah.
And and it's going to affect people personally. You're back to, well, how does it affect somebody personally? Well, people have done their planning and their financial planning based on that. I'm going to get these, I'm going to get Social Security, I'm going to get Medicare benefits. So has that limited people's savings because they know that theoretically the government's going to take care of them? Their Social Security, and then they're going to take care of their health care. Would people have saved more if they knew that they might not get this? Very shortly, the quote trust funds are going to run out, and they're going to have to automatically cut Social Security and Medicare benefits. And I don't think people have planned for that.
No, it's pretty wild to see the number of just normal Americans that have no sort of retirement savings at all. And it's something that has really bothered me in my working career, working with older adults that are having to work in their 70s, 80s, even later, just to be able to survive because Social Security doesn't cover their expenses.
And I think it's in people's psyche that it does. And people have, they've gotten away from. It kind of reminds me of when I first started speaking on Social Security and Medicare and the national debt. I spoke to this group of elderly women, and and I asked one of them, because I knew she'd lived through this. I said, we used to have a government where people took care of themselves, they took care of their family. They didn't rely that the government is going to take care of me. Where did we get from, I'm going to do whatever I can to take care of myself and my family, to the federal government owes me the Social Security and Medicare and you can't cut it at all? And she said, you know what? When I was little, my family would travel on Sunday drives. We would go, and I think she was in horse and buggy. She was so old. They would go through the countryside, and in their route, they would pass the local poorhouse. And not that I'm advocating for poorhouses, but her parents said, you will do whatever you can to not wind up in the poorhouse. You need to take care of yourself. And if you had a family member who was struggling financially, you took them in and took care of them. And so, but and that poorhouse was that community's taking care of its own. And she said all of that sense of personal responsibility, family responsibility, and community responsibility went away the day that they passed Social Security, because it became, I don't have to, I'm not responsible. I don't have to keep money for myself. My family, I don't have to keep money for my family. And the community, it's all going to be handled by that big box in the sky, the federal government, and all these personal responsibilities went away.
Yeah, that's a really interesting take on things. And one of the things that's really a bummer is it's just not working whatsoever. Like I live in Tucson, Arizona, which is a very poor city. We have a poverty rate of about 25%, and when you look at the poverty line, it's just abysmal. I can't even imagine living on that. And so people are forced into being on every government program that could possibly exist just to feed their kids. And it's just it's kind of a trap. And I think that's one of the things that's really hard about the really changing the system, or is preventing us from ever getting to a point of balancing budgets and cutting government program, is we're forced in this. These people would be left out to dry if we didn't do this. And it feels
people
like
become to, they've government has expanded to take care of a lot of people, and it's very difficult to cut back on that. But it's been able to expand because people, they've been able to, increase government without having to charge people the taxes, and the taxes might have limited that increase.
Yeah. So my mom's a teacher in the Chicago area, and one of the things that's really scary about the Chicago area is the pension system, and I would say that's probably kind of a scary story for most of America right now. What is going on with these unfunded pensions?
Well, again, what happened, and it always, I hate to, goes back to the balanced budget requirement. And if you're an elected official, and the teachers are wanting more and more compensation, well, if you say, okay, we'll increase your pay, well, that increases your expenditures, and then you have to either cut other things, or you have to raise taxes in order to balance their budget. But what they figured out was the pension scheme, it's a deferred compensation. I can go ahead and promise these people, teachers' benefits. I don't have to include those amounts in their budget. I can fund those, whatever, CPS funds, I think a quarter, well, City of Chicago, I know, funds a quarter of what they should. So they underfund them. And then the teachers have been promised them. And in Illinois, you can't cut them back. So, eventually the taxpayers are going to be on the hook. And if they would have had to fund these as they were promising them, then they might not have gotten out of control. But if you leave it, and previously, we used to talk to legislators and people about pensions, and they're just like, but I really don't even understand, especially legislators. I was dumbfounded. They're just like, I really don't even know how those work. And they didn't know that they needed to be properly funded. So you have these elected officials who obviously, usually are not financial people, and they're managing tens of hundreds of billions of dollar pension plan systems without having the financial wherewithal to do it.
Yeah. Yeah. On my journey of understanding money, I've definitely adopted a much more libertarian view of the government really has no responsibility in the economy. And I think that's part of the reason is they just don't.
And even if you think about it, if you have legislators who are, economically and financial, have accountants, economists, in the system, and they understand, okay, I'm promising this benefit, I need to fund it, and all of, and understand the finances of it, and try to make, responsible decisions. But then, even if you had all of those type of people in the legislature and the city councils, but then politics get in the way. So in addition to legislators not having the financial savvy, even if they did, then they make decisions not based on what's best economically. They make decisions based on what's best politically. And unfortunately or unfortunately, we elect people, for a short period of time. So they're not thinking of, oh, well, I promised this employee a benefit, I don't fund it. Future taxpayers, in decades to come, I don't need to worry about them. I need to worry about getting reelected now. So they make short-term decisions that have put these governments, to have these huge pensions now that unfortunately they're getting so big that people can't ignore them any longer.
Yeah. So what does not ignoring them any longer look like?
Well, it looks like Illinois. People used to ask me, what's going to happen? You're talking about all these numbers, and it's bad to have this debt. It's bad not to balance your budget. What's going to happen if we don't balance our budget? And fortunately, Illinois is now giving us real-time, real-life examples of what happens. So Illinois, is they're the only state that, during this crisis, they can't go to the markets and say, we need to borrow money because we're in horrible, because of the pandemic. They're having to use some facility that the Federal Reserve has created. Don't ask me where the Federal Reserve is getting money to lend to Illinois. That's a whole nother topic. And then also, it's affecting people personally. So let me give you 2 or 3 very simple personal examples. So a few years ago, Illinois, again, keep in mind, they balanced their budget, but the way Illinois' budget is calculated, it says, the Constitution says, the funds available have to equal their expenditures. Notice how they're not saying revenues and expenses. Funds available have to equal the expenditures. So now, if you borrow money, that becomes funds available. And so Illinois can go to use this Federal Reserve facility, borrow money, and they can still claim that they're meeting their balanced budget requirement. On the expenditure side, Illinois has between $3 and $10 billion of unpaid bills at any point in time, from their vendors, from their hospitals, their copier company, billions of dollars of these bills. A vendor doesn't get paid for 6 to 18 months. They submit a bill, then they don't get paid for 6 to 18 months. It got so bad that the vendors said, hey, you guys, you need to pay us more timely. And they said, well, we can't, so we'll give you interest. So the state's paying 1% interest per month, 12% interest rate to these vendors because they're not paying their bills on time. That amount was in one of the years, it was so high that it was more than they were funding for universities. It was $300 million, and it was more money than they were funding universities. And then a specific vendor example is that a vendor was providing the state police with ammunition. And he said, you guys are so far behind, I'm not going to give you more ammunition because you need to pay me before I give you more. So they had to try to find another vendor to give them ammunition. And they almost ran out of ammunition because all the other vendors were like, we know we're not going to get paid 18 months to a year, 6 to 18 months. We're not going to give you money, give you ammunition. They finally found a little vendor in Indiana who would take their credit, but they had to pay a premium for it. And then if you're if you're on the state's healthcare system, so this is state employees, teachers, except for Chicago teachers, retired teachers or retired state people, if you go to the doctor, you have to pay up front for your health care. And then the state will reimburse them. If you have an operation, you either have to, if I need a knee surgery, I have to gather $5,000 and pay up front to the doctor in the hospital. And then the state will reimburse them, and then they will reimburse me. If the state is willing to take the credit, it gets to a point where they're like, if the hospital says, oh, I ran into a former retiree who said, well, I got knee replacement. They didn't make me pay up front, but after the state didn't pay the hospital for 3 months, they put me on a payment plan. And they had to pay the state to pay the hospital until the state reimbursed them. So those are personal things that are happening right now in the state of Illinois because they have not been balancing their budget for decades.
Yeah. One thing I can guarantee is that these teachers probably don't have the money to pay those hospital bills.
Yeah, and so then they're delaying necessary surgeries on necessary health care because the state is not paying them.
Yeah. So when is this system of just nonsense going to break, do you think?
Well, as I said, those examples I think are showing that it is breaking already. Illinois, as I say, they can't go to the market to borrow money right now. And the current crisis is kind of highlighting that all of this is going on in most states. We found we do a financial state of the states every single year. We found that only 39 states had only 11 states had true rainy day funds, had enough money. They didn't have debt. The 39 other states cumulative were $1.4 trillion in the hole. So they didn't have the money they needed going into this crisis. And now, they're just begging for Washington to give them a bailout, or they're using the Federal Reserve vehicle in order to borrow money. Is the Federal Reserve kind of messing with state powers? Because, you have these state balanced budget requirements, but if the Federal Reserve comes in and helps them, it kind of allows the state to go in debt, and the balanced budget requirements are there, so they can't go into debt.
Yeah. A lot of people don't understand what the Federal Reserve really is and how it's actually a private institution that has power over the issuance of money. There's this famous quote by Mayor Rothschild, not like mayor elected official, his name was Mayor. He says, "Permit me to issue and control the money of a nation, and I care not who makes its laws." That idea of our democracy being vulnerable to issuance of money is a pretty terrifying thought, that these states, their only way out either is to exist or cease to exist, kind of like you're talking about, where people don't give them the things that they need to continue to operate, like ammunition for police, or cars, or gasoline, or whatever. their only way out is to go to this private institution that has a pretty sketchy history, to say the least. Oh man.
Yeah, and are they? And I'm not a lawyer. It just seems like there's something amiss here because the balanced budget requirements allow the debt. It's sort of like, we understand that governments sometimes need to borrow, but we're going to limit that to the market, and so therefore if the market is thinks that they're credit worthy, then they'll lend them money, but now that's now they don't even have to worry about being credit worthy. They can go to the Federal Reserve, and I know that my research director Bill Bergman he was concerned because in order to borrow the money from the Federal Reserve, the state of Illinois had to say that they were fiscally solvent. Well, are they really fiscally solvent if they have $226 billion of bills where they have no idea where they're going to get the money to pay those? But the governor signed that letter that yes, we are fiscally solvent. And to throw the Federal Reserve into the mix of financing states and local governments is, I think, again, expanding government beyond what people want it to be, because they're able to get this money and use it. And Illinois, it wasn't like, it wasn't like, okay, we're in horrible financial situation, we're in a pandemic, we're going to cut costs, we're going to hold salaries level. They did nothing. They continued to keep a salary increase. They didn't go to the agencies and say you need to cut costs. They put in their budget, in their balanced budget, they put a line that says, $5 billion we're going to borrow or we're going to get from the federal government or from the Federal Reserve. And so they didn't tighten their belts at all. They just continued going. And there is a salary raise that is automatically in place, and they didn't go, well, these are tough times, we need to pull that back. They're just counting on the Federal Reserve and the federal government to give them money.
Yeah. Money printer goes burr. That's been the meme of 2020. Man, so looking at this coming election, it doesn't seem like there's any hope of addressing these issues, and that the only way forward is increased government spending.
The amounts, when I got into this, decades ago, we were concerned that they were running, a $200 billion deficit. We were like, oh my God, now I saw some report where, well, if a Biden is elected, the deficit will be 4.8 trillion. And if Trump is elected, it might be 5 trillion. It's just gotten out of control. And people are sort of like, well, yeah, and we can borrow money and it's always worked and da, 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 da. And, and that's what everybody thought during the housing market, rise. Housing prices always go up and we're always going to be able to get our money back. And when it crashed, there were a few people like us saying, hello, things are going to go bad, but not a lot of people. And then overnight it crashed. And I've also talked to two accountants, one who was in an Eastern European country and one who was in, I think, either Venezuela or Argentina. And when they were having financial issues, and they said, yeah, people understood, and we were pointing out, and others were pointing out that things were bad, but overnight things got really bad, and they crashed overnight. So that's what scares me is, what if other countries say, no, we're no longer going to buy your treasury bonds, and what if, and then the printing presses will have to go any higher. And people, as they're counting on this Social Security, this limited amount they're getting, or they're counting on government services, all the cost of their, the products that they're buying are going to go up as this inflation happens.
Yeah. Yeah. I mean, I think what's really unfortunate about this whole financial crisis and pandemic is that the rest of the world is hurting really, really bad and are in similar positions as the United States. So in some degree that offers us some security because for, whatever reason, we're seen as one
We're
of the safe.
the best of the worst.
Yep.
So,
Yep.
yeah, there's no better place, and I think that's why, we're they're able to, to run these huge deficits because people don't have a better place to put their money in. But it's scary.
Yeah, but that being said, I think what you're talking about is happening faster than people realize. Like China said at some point this year that they're dumping a bunch of treasury bonds, which is a pretty terrifying. One of the biggest markets in the world is going to be not willing to buy our sovereign debt in the same way. And that might be a growing trend. There's definitely, to make matters worse, there's these currency wars being waged where lots and lots of nations are trying to attack the U.S. Reserve currency. I think they're rightfully doing so because we've done quite a number on the rest of the world. But yeah, the examples of Venezuela and Argentina are really, really interesting. I was listening to a podcast with the CEO of the company MicroStrategy, who had $1 million that within weeks turned into 80 grand in Argentina because of capital controls and hyperinflation. And so what we could potentially see is just like people's wealth being wiped out in a way that's just unprecedented. So yeah.
And people just don't think it will happen. But again, I want people, if they experience the housing market crisis, just think of the mentality before that happened, where everybody everything was fine and everything was going to be good. And we've always had it this way, and prices always go up. And then overnight it crashed. So unfortunately, are we setting ourselves up for, and that was just the housing industry. If we're looking at the whole U.S. economy crashing like that, and if you think about the deficits, if previously when we were running, $500 billion, we were borrowing. How much of our government spending are we borrowing? And if that money went away, what would we do? We would have to immediately make huge cuts if that money went away, or have the Federal Reserve buy our debt, and then inflation would go up. On our truthinaccounting.org website, I have refer to an old article called "The Two Doomsday Scenarios," which is hyperinflation, or that we can't borrow any money, and both scenarios are not good.
No, they're not. So we talked a little bit about hyperinflation. What would it look like if we couldn't borrow any money?
Well, again, a very large part of our budget is, like right now. Okay, we're running, what are we at? 2 trillion, 3 trillion? We're probably at $3 trillion debt deficit. We'll probably run another, $3 to $5 trillion next year. Well, imagine that deficit means that we're borrowing that money. Well, if people aren't willing to buy that money, buy those bonds, then we wouldn't be able to spend that money. So all the money that we've been using to help people, small businesses, to help with PPE, to help with healthcare because of the pandemic, we wouldn't be able to borrow that money. And what would we do? And just in a normal budget, as I say, during a normal budget, we're borrowing between a third and a half of it. If we had to cut the federal budget during normal times between 30 to 50%, that would be a huge percentage, and people would not get, the benefits that they're counting on. That some people need to survive.
Yeah. So without any sort of radical change in the near future, it sounds like we're just on a collision course for chaos, more so than we've even seen.
Yeah, and I don't see, even in the state of Illinois where things are bad and people are finally, we've been shouting for years and people are just like, oh, what is that pension stuff? And why do you keep on mentioning this? And, we're doing fine. And even though now they can see the adverse effects, I don't sort of see them going, oh my gosh, we've been not living responsibly. We need to change our ways. I don't see that. Unfortunately, I don't think things will change until, huge crisis happens. And, I hate to say that, but that's the way it looks in most of these governments.
Yeah. Yeah. Well, I've been really blessed personally to be in a community of people that really has a hopeful outlook on the future. But that outlook doesn't include a lot of pain coming forth soon. So what my podcast is educating people about financial literacy, and then also talking about things like Bitcoin and Austrian economics, especially, which is kind of funny because I'm in school for a Keynesian economics degree right now. But I'm currently reading. Are you familiar with Murray Rothbard at all?
No, I'm not.
So Murray Rothbard, he's a kind of a famous economist that is of the Austrian, or was of the Austrian persuasion, and he's kind of the father of American libertarian thinking. I might be wrong on that, but he had a major influence on it. But one of the things he talks about, he wrote this book that I'm reading right now called "What Has the Government Done to Our Money?" And one of the things he talked about is how for money to really work, it has to be outside of government. It has to be universal currency, and it has to be determined by the free market. And so, gold has taken that role for the majority of human history, people taking gold and minting coins in it. But in our digital world today, it's not really possible to do that in the same way. It's hard to transact in large portions of it. Whereas Bitcoin, has a lot of similar properties as gold, as being verifiably scarce. Have you ever looked into Bitcoin or digital currencies?
No, that's something that I haven't studied. As you're talking about the inflation and the Bitcoin and the CPI and things like that, we do have an economist on our staff named Bill Bergman, and I think it would be very valuable for you to do a follow-up interview with him. He gets those type of things. I'm in the accounting realm, and that's all above my pay grade.
Gotcha. Yeah. There's this accountant in Bitcoin that I really like. His name is Pierre Rochard, and he might be an interesting guy for you to look into, but he loves to audit everything. That's his specialty.
Yeah.
But yeah. So what do you think would be some good resources for people, just normal people, to learn about money and, what to do in a crisis like this?
Well, we've gone ahead and, to be self-serving, our website provides them provide them with information about their governments and, how much debt. So as people are, maybe considering moving out of a certain state because they're not financially sound, you can go to our Data-C website. look at each individual state, see how they're doing financially. You can go to create your own charts and look at look at data, not just our financial data, but look at housing prices, look at voting records, look at not to insult the attorneys in your audience, but we find that we have a data point called the number of attorneys in a state. And we do find that the more attorneys you have in a state, the worse financial shape you're in. And obviously, if you're in a bad state, then your roads are worse. We find that as part of our data series. We also find that if a state isn't in good financial shape, the doctors who take Medicaid, new Medicaid patients are less. So, so it hurts people who need those services. They can't find a doctor because the doctor isn't getting paid on time. So they're from the state for their Medicaid expenditures. So fewer doctors are taking that. So, and then you can also see, we did have 11 states, Alaska, Wyoming, Utah, North Dakota, South Dakota, Nebraska, Tennessee, states that are, before the crisis were doing well. And so you can look at those states also. And look at also, if you're moving to a metropolitan area, you can look at, okay, if I move to the Chicago area, how much debt, we calculate that between the city debt, the school district debt, the CTA, transportation authority, the county, the state. Each person who moves into Cook County has a credit card that is already charged $128,000. These are taxes that they're gonna have to pay to cover debt that's already been incurred. So you might want to move to a city that doesn't have so much debt, and so those are valuable resources. And then just going to each individual state or city's financial state of the states, and looking at does the state truly or city truly balance its budget? Is a valuable tool also.
Yeah. I heard Wyoming pop up there, and that place seems like a pretty safe spot to be.
Yeah. I think about Wyoming myself. I do ski, so maybe Jackson Hole, but we have not chose wisely as Indiana Jones movie. We did not choose wisely on where to live. Living in Cook County, living in Chicago, living in Illinois, it's not a good choice here.
Yeah. One of the things when I go and visit my family in Cook County that always just astounds me is taxes and how high they are.
And it's not just that it's income taxes, property taxes. Then last year I think they raised fees and other things by like $3 billion. So it was your licensing fee went up, your driver's license fee. They just did tons of fees that went up also. So it's between taxes and fees. You're into a lot of debt here, but they have to do something to pay for the costs that they've already incurred.
Yeah, the one that drives me crazy is the toll roads, paying taxes when you drive.
Yeah, and those, the Chicago Tribune here has been doing a huge series on because they need money. So now the legislature is trying to change the Constitution here, so they can tax the wealthy more than at a higher percentage than other people. Right now the Constitution says that they have a flat tax. They have to use the same percentage for everybody. The legislature and the governor have put an amendment on the next ballot to change that. So, the legislature can, as they say, the wealthy pays their fair share. But the Tribune has been saying, well, fool me once, fool me twice. People, you were told that the toll roads were only going to last for a number of years. we're decades beyond that, but you're still paying tolls. You were also told that, the education education was going to be funded by the lottery. Well, that's not happening. You've been told by these people who, are running your finances and not doing it, and doing it poorly, that, we need more money, that we've been balancing our budget. Every year they say they balance their budget, but that's not true. So can you really trust them with additional revenue coming in? Or, should you not really give them any more money until they fix things? They didn't propose constitutional amendment to change the balanced budget requirement that has allowed them to say the budget's balanced. But they're they've had a balanced budget. They aren't going into debt, right? No, they're $226 billion in the hole while they balance the budget. Well, let's fix the balanced budget clause so you can't do that. Or let's fix the pension clause so we could, once somebody starts working here in Illinois, you can't change their benefits at all. Even if you can't afford benefits, you still have to pay those employee benefits. From the day that they go on, whatever pension system you have, whatever benefit structure you have to pay them. If the legislature goes ahead and enhances benefits, even if you can't afford those enhanced benefits, you still have to pay those. So maybe change the balanced budget pension clause, but instead they are trying, instead of doing a comprehensive package trying to fix everything in the Constitution, they're just saying, here's a tax hike amendment, give us more money.
Yeah, the thing, I take a lot of issue with the wealth tax. I'm not wealthy, I'm just a poor college student, but I take issue with a wealth tax because it's almost punishing people that produce value in society. And what it doesn't adjust or account for is that we have a system where wealth is extracted from people, and it creates a stratification of wealth that we're seeing today, the income inequality, when you have things like inflation, and the way our tax system works is just like nonsensical. When a majority of taxes are taken from income taxes, and wealthy people own shares in companies, and they don't get taxed in the same way. It's just rather it's rather silly. And I think like the ultimate solution would be to reward people that produce value in society, and for people that destroy value, instead of rewarding them through for being closest to the money printer, or having a banking charter, whatever it is, to really if they destroy value, then they reap what they sow instead of benefiting from it. But
I think it also makes it so people that they can expand government without accountability.
mm-hmm.
Because if I go ahead and expand government and I raise taxes on this very small part of the population, well, that's not a majority of the taxpayers. So this small part of the population who are paying taxes can't go, hold it, you're being inefficient with this money. You need to be held accountable for this money. And then you have this other part of the population, which is a majority, and they're saying, well, we want more goods and services. We want more goods and services. And they vote for the people who give them more goods and services. And so then government spending just gets out of control, because they're trying to, they're almost like all the elected officials, whether they're Republican or Democrat, are trying to one up. Okay, well, they're giving them this benefit, and only this small part of the population is paying for it. So they're not going to vote us out of office if we keep on expanding this and making this more. And you lose accountability. I think you hurt your representative forms of government, because the majority can vote to tax a minority. And then you also lose the majority where they're like, well, maybe, I shouldn't be as wealthy. I shouldn't try to do as well. I shouldn't try to help our economy because I'm getting, as you mentioned, I'm getting penalized for helping the economy.
Mm-hmm. Yeah, it's really going to screw up the incentive structure and chase people out. Did you say that you have a book?
Every year we do the financial state of the state, so that's on our website. And I have not done a book yet, but my team always wants me to. They're always like, "Why do you not have a book?" The title, the working title would be "Complicit, Complacent, or Conspiracy." Are these all bad financial situations happening because people are, complicit? Are they just complacent, or is there actually a conspiracy causing all of this financial issues to happen?
Yeah. Well, if you ever get that going, let me know, and I'll be the first person to pre-order it for sure.
Thank you.
Thank
you.
So you talked a bit about the website. Where are some other places that people can follow your work?
Well, we just have the two websites, truthandaccounting.org, data-c.org. Also, we issue on those websites, you can sign up for what we call Morning Call, which our research director, Bill Bergman, quote, aggregates, that's that new term you guys use, aggregates the most interesting federal, state, and local government budgeting and accounting stories, and puts them out in a daily email. We also use that when we release our financial state of the states. Next month, we're going to do a transparency score for the states. As soon as the federal financial statement comes up, we'll do a financial state of the union. In January, we will release the financial state of the cities. All of those releases are announced in our morning call, so you'll be up to date on when those are coming out. So you can just go to sign up for those, and it will come from, again, Bill Bergman, our research director, and you'll get a daily email to keep you up to date.
Awesome. Well, thanks for coming on, Sheila. I really enjoyed the conversation.
Yeah, me too. And as I say, I really encourage you to bring, I'll mention it to Courtney, to bring our economist, Bill Bergman, on. I think you guys will have a lot of fun talking about CPI. And the Federal Reserve. Don't even get them started with the Federal Reserve. So you'll have a lot of fun talking about that with Bill Bergman.
Yeah, well, I look forward to it. Man, if that conversation didn't make you bullish on Bitcoin, I don't know what else will. It sounds like, from what she was talking, that the government is just going to run us into the ground. And I think we all know that, but this puts some pretty cold hard data behind it. And she had some really awesome examples. Our governments are broke, and it is really scary to see that probably the only thing they'll ever do in the future is continue to become more and more insolvent. But yeah, she also has some work on YouTube if you want to search for her. Just really good conversation. She's a very, very intelligent woman, and it was awesome having her on. But yeah, if you like the work that I'm doing at Tucson Blockchain, it'd be awesome if you could support me by subscribing to the podcast, leaving reviews, commenting, liking, doing that whole thing. It does a lot to get me out there in regards to the algorithms. And you could also donate Bitcoin to me. Tucson Blockchain is our mission. Hers is just to empower normal people to make more informed decisions. So yeah, thanks for stopping by.